Finance New Orleans Finance and Investments Committee meeting roll call. Members, Chair G. Wade Wooten,
Present.
Mr. Charles H. Brown, Mr. Hunter Thomas,
Present.
Mr. Edgar Chase IV. A quorum is present.
Actually, do we? We've only got 2 of 4. I don't know if that's a quorum.
Mr. Chase is not part of the Finance and Investments Committee. He's
Okay,
at.
thank you. Thank you.
you.
Okay, appreciate that clarification. So looking at the agenda, finish roll call, it looks like there's nothing except for old business. So turning to new business, item 3. There's 2 sets of meeting minutes. The first is from the October 17th, 2021, and then the second, actually no meeting. So I guess we're really just approving the first one, or is it both? We didn't have a meeting.
Yeah, approving the October 17, 2021 meeting minutes. There wasn't a quorum on November 16th.
Okay, so let's see, let me just look quickly at the minutes. October. One quick question. It was like, you see October 19th right there? Is the date correct? Scroll up a little bit. Yeah, thank you. The question is I think they're October 19 minutes, whereas the agenda item said October 17th. I could be wrong. You know what it probably was is the meeting before that was August 17th, so maybe the number got transposed. Am I making sense?
Yeah, that's probably maybe what happened.
Yeah, it's nitpicky, just clarification. But other than that, let's see, I'm taking a quick look at the minutes. I mean, I don't see any issues from my end. Hunter, any issues, concerns? And I guess technically we're just authorizing the receipt of them because ultimately the board is the one that formally receives it, right?
Yeah, we're just accepting, the committee accepts at their level, the board, if we required the board to approve, then they would approve. But normally if it's accepted, it goes straight into the consent agenda item, so it's approved at the board level.
Okay.
Okay.
Hunter, are you comfortable with the minutes as currently drafted? We really didn't act, well, of course, we're just talking about the budget, which obviously that's going to be approved by the board. And then we discussed the dashboards. Nothing really significant acted upon. Since I'm chair, Hunter, would you mind making a motion? I can second it. You're muted.
I'd like to move to approve the minutes.
Thank you, sir. I will second that. And since you and I are the only ones here, I think it's passed unanimously.
Right.
Okay. Let's see. Second agenda item is just the finance and investment report. Byron, the floor is yours.
All right. So good afternoon, committee members, and we're at our last meeting of the year. So if let's see if we can scroll to the next page, please. All right, so we'll start with the market update and then roll into the finance report, status report. So the markets overall have been fairly mixed Investors are kind of assessing the, the risks surrounding the new Omicron variant, and then trying to determine what's going on with this new, with the Build Back Better bill, and trying to figure out, what's going to go into the bill and when it's going to get passed. So markets have been kind of all over the place the past month. One thing that remains the same is inflation. It's still elevated. The most recent numbers came in at 6.8. That's the highest level since 1982. It's in line with expectations, but it was still elevated. One thing that's not included is a backwards looking number. So we did see energy prices come down. So in real time, it may be a little lower, but still high overall. We have seen the Fed Chair Jerome kind of change his tone. So for the past couple of months, I've been saying that the Fed and he's been saying that, this inflation has been transitory. Well, he's recently suggested that the word be retired from discussing any type of, when discussing any type of inflation. So they're just about acknowledging that there's some pressures that's been more persistent than they expected. It's likely that we'll see a rate hike sometime this year. A lot of the forward-looking projections are showing, an increase in the Fed funds rate. So we may start to see that rate move up. So they're talking about maybe upwards to the 2% range. Democrats are looking to take up the Build Better bill. They're trying to do it before December 25th, but it looks like they may face some uphill battles because they don't have the votes needed just yet. And just recent news, you're seeing there's a lot of lockup in that. So we'll see how that goes, but they're trying to target before the holiday, before 25th, to get that done. Just like we saw, the markets were mixed, bond rates were mixed as well. Treasury rates decreased by 5%, the 10-year Treasury yield. We saw munis shift, they decreased. Mortgages kind of moved sideways. And I think they're just kind of awaiting news as well with this COVID variant. And then on the local side, the Orleans Parish metro area actually gained jobs over the past year through October. So the unemployment rate actually went down to 6.5 in October. That's down from the 7.9 in the prior month, and then down from the 12.3 that it was last year. So headed in the right direction there. All right, we can advance to the financial status report. Page 7, yep. So year to date, this is as of November. Year to date revenues are 119,000 to a budget of 368,000. So that's a miss by 249. The story remains the same. We have that miss in that multifamily program income line. We should be closing on these pilots this month, and that will, generate some of that revenue in that line to kind of catch up to that budget there. And then on the expense side, year to date 1.6, so a budget of 2 million. So we're favorable there. Been that way the entire year. Next page. Overall trends, we're in line on averages with revenues and expenses. We typically see a lift in December as we pay our remaining invoices and contracts, but November was fairly in line with averages. Next page. All right, balance sheet year over year, no major changes here, same composition, same makeup, so no minimal changes year over year. Next page. Pathways minimum movement here, year-to-date revenue is 2,000. And we have our year-to-date expenses at 39,000. Next page. And then we have our cash and cash equivalents, which is essentially our net, kind of our net expenses month over month. So we're at 9.5 versus the 9.6 in the prior month, which is, in line with the trends and the expense that we anticipate on a month over month. So we're at 9.5. Any questions on the market update or financial status report? You're on mute.
I got a question that's kind of a tangential. With the uptick of interest rates, I mean, from our perspective, that's actually good because it should open up some options. I mean, maybe more of a question for Damon, which is, chatting with our financial advisors, do they provide like a trigger, which is like if the interest rates get to this point, we could actually start to, potentially move forward with like the traditional mortgage products, homeowner, products. I'm just curious.
Yeah, so there's, with the increase in interest rates, we can see an uptick in production. So that's one side. But then, in terms of the spread that we receive from the short-term rates versus the long-term rates, we typically, when those rates increase, we typically see a shift in that yield curve, whether the longer end is higher than the short end, right? That kind of gives us, greater amount of spread. And so, yes,
Right.
so there is, right now we're getting to that point where it's looking attractive. But they, our advisor definitely keep us in the loop of, and he presented it, probably saw those graphs he presented at the board retreat. It kind of shows those spreads. And so they're starting to widen again. We'll definitely see that. And, as these rates increase, you'll see a lot of the longer end of the curve increase, and, they'll let us know when it's definitely time to get in. Yeah.
It just gives us another product to throw into the mix.
Absolutely.
Thank you.
And Wade, one more thing to consider with increasing rates is, Byron touched on our internal yield, but as we rebuild these trusts of assets, single family, multifamily, the more interest we charge, the more we collect, or our spread can improve. Our spread, we have limitations on what we can charge for a spread on our tax exempt programs, but point being, as rates increase in the long run, we should just see more attractive returns for, the public assets that we're putting out to put these programs on.
Makes sense.
And just to add to that too, we'll also see an increase. It's not a huge amount, but over the past 2 years, we've seen the interest on the cash that we have just sitting in our accounts kind of dwindle, and that's in line with the rates, right? So as those rates go up, we should see a pickup in that as well.
Thank you.
Yeah.
It looks like so Byron, you've concluded your
Yeah, well,
report?
so the next item we have is the final budget. So if we can turn to the budget report.
Byron, hold on one second.
Okay. You need me to get it now?
Yeah, if you could present it, please. Thank
Okay.
you.
1 second here. All right, can you see my screen?
Yes.
Okay. So we have the final pass of the budget that we'll need to get approved by the committee today. We'll also need to get this approved by the board for adoption as well on Friday. This is kind of the fourth iteration or pass of the budget, but not much has changed. Really, there's only one thing that changed from the last pass that was seen at the board retreat and at the last month's meeting. And that is the capital expenditures line was increased. As you're aware, we had to, we're in process of going back to Barone Street at mid-year. And so, we need to start that process of, making those repairs and those renovations there. And so, we did have some damage from Ida, and we did file a claim with our insurance, and we did receive some proceeds, but it was minimal. And they also provided an estimate of the repairs for the essential items like the roof and getting the flooring done. And so this increase in that budget line, which is 70,000, is the difference from what we were paid in the proceeds minus the estimate of the repairs. So ideally that line is 70,000 higher, the capital expenditure line, but everything else remains the same in terms of the budget. So the preliminary budget or the proposed budget here is set at the 2.3. This is approximately 2% less than what we had last year in the budget. Total revenues are 803,000 that we're anticipating. It's roughly almost double what we had last year, given our, start of our programs. And then we're allocating the 1.5 from reserves, which is much lower from the 1.9 we proposed last year. So overall, 2% decrease in the budget. And we move to the next page. This is the long-term projection that it was requested a few meetings ago. I think it was in October. We looked at this at the board retreat. There's no changes here. Maybe small minor changes in the movement in the numbers, but ideally we're looking at a break even in 2026. And keep in mind, this is very conservative. This is only our existing current programs that's operating. This doesn't include any direct bond transactions or revolving loan fund or any of the other proposed programs we're looking to get afloat. So very, very conservative projection here. So the projections will always be fluid, and I want to start including this in our monthly meetings so we can see the movement. And as we start to refine these numbers, we'll see these projections, and I anticipate we'll see improvement in these projections. So once again, just wanted to show this long-term projection again. And then this is a projection on our cash and cash equivalents. I know this is something that came up in one of our previous meetings. I think Ms. Morris wanted to see that projection of cash going out. So this basically represents the cash coming in, the green bar, the cash going out, the gray bar, the net cash or the dots, right? And then that line just shows our actual cash. So we're sitting at, or we're anticipating at the end of this year to be at 9.6. And you'll see that once we get to that break-even point in 2026, we'll start to see, the net cash be positive when we start to see our cash build again. Once again, conservative numbers, and this will be fluid and updated on a monthly basis.
This is really helpful. I appreciate it.
Yeah, no problem.
And the idea is it's not set in stone, like you said, it's dynamic, but it's based on best estimates, and over time it can change. It's not etched in stone.
Yep, exactly. And we just finished talking about interest rates. I mean, that'll be a small piece of this, but movement in interest rates will affect, the projections. So it will be fluid.
Byron, the only thing I'm wondering too is obviously with our historical products, like, encouraging home ownership, you wanted somewhat higher interest rates. I guess it's a fine balance, because if the interest rates become too high, then it would negatively impact some of these new product lines that we're going after. So it's kind of like that sweet spot in between. I don't know.
That's exactly. Yeah, you're exactly right. It is a kind of a fine line, a sweet spot we got to find. So.
Thank you.
Yeah, no problem. Any other questions, comments?
Hey, Byron, can you, just for the board's pleasure, touch a little bit on the fundraising we're doing and how that factors into the projected cash balance and how we're going to use that capital over time?
Sure. So we've been aggressively in communications with potential investors. Some are looking very, very promising, and these projections are based on receiving some low cost grant dollars, as well as program related investments. And so this anticipates a $10 million grant or investment. But I'm allocating over time $1 million a year. So that's minimal, right? So we're aggressively going at seeking way more than 10 million. So that's why I mentioned this projection will most likely improve with that and with the programs coming on. But ideally, first we're going after the grant dollars, which it may be a smaller amount of the 10 million. It's just a harder bucket to get. But the other piece of that is what's called this program related investment, or PRI, that allows you to go out further on funding at a lower rate. So our debt service is much cheaper. So we're aggressively looking at that. This model, when looking at this projection, next year, we're only showing $1 million in grant dollars coming in. I'm fairly comfortable we can get at least that, if not more. Because like I said, we do have some potential strong investors, 3 of them lined up right now.
Damon, I had a question unrelated to this. Did you want to still talk about this topic? We might as well chat about it now, because I can imagine it coming up at the board meeting, which is for the capital projects at 140,000. I mean, my gut is like the roof leaks and the getting the bathroom operating properly are like 2 significant items. I got to think other folks on the board would echo that. I'm just trying to think how it can be woven into your presentation, because somebody's going to ask that question. Thoughts, comments?
Sure, Wade. Just to start off, I will tell you that we did share the actual summary of repairs that needs to be done at 618 Barone Street. So that's already been shared with the board. We can definitely attach it as well for the board meeting as an item, just as a resource item, if it meets your pleasure.
Yeah, I guess the only question is, truthfully, I didn't look at it, admittedly. As long as there's, that there's kind of leadership believes that it's a reasonable amount of money to correct at least those 2. In my mind, those are the 2 major things. I mean, I could be wrong, right? There's other stuff I'm sure you want to tackle. I'm just flagging it just so y'all are adequately prepared to address it.
We did talk about this at a previous meeting. So we do have an outline of repairs. They are itemized out individually. So the first main 2 or 3 that we want to tackle is definitely the roof. And then the next thing is internet access and all that stuff. We also have, you know, we need to do an electrical walkthrough. We need to do a plumbing walkthrough. So, you know, we need to do a pest and rodent walkthrough. So we have a mold remediation. So we have a number of things that we'll be tackling. But I think the best way for us to approach this big project is going to be individually, since we have the outline of damages, which is super helpful. And as we choose, you know, who the actual vendor will be for these itemized projects or individual projects, we'll definitely keep the board abreast. And we, you know, we'll definitely, when we get to the design part, have a complete presentation of what our vision is for the office once we take care of the essential needs at 618.
So I'm just, again, trying to anticipate questions. So, I mean, the 140 amount though is not, it's not based on an actual quote to fix it, is it?
So
Question mark?
let me, so
Yeah.
so that 140,000, a portion of that is for our customer relationship management system. Roughly 70,000 for the implementation and the, you know, the upkeep of getting that on boarded, and then the remaining 70 is for the building. So, you know, we received, I think it was, keep me honest now, it's 90,000 in estimated repairs for the essential items, right? And so we received proceeds of roughly $10,000, and so that difference is what's added to that budget.
You know, it's just, look, I don't have a bone in this fight. The idea is it's not necessarily going to be a fight either, to clarify. It's just, you know, as we get quotes, it could be spot on. It could be higher or lower. I mean, we'll know more when, you know, like I said, maybe what at a certain point, I guess you'd have to come back to the board for additional approval that exceeds a certain amount. I can't remember what the process is.
Yeah, Wade, and
Right.
to add more color to this, from a long-term perspective, part of our fundraising ask includes a modernization of our physical plant, of our home office. And then it also, there'll be some sort of cost benefit that we would realize because we would no longer be paying rent. So there's a cost to us getting back in that building. And right now, there are some basic improvements that need to be made that we've been talking about for some time. That's what's in the budget, but there are some additional modernization investments that we'd like to make. And those are also contingent upon us making more, bringing in more cash, either through programs or through, one-time fundraising efforts that will allow us to make some of those one-time investments now so that we can realize those benefits sooner than later.
Fair enough. I just, sometimes, it can be, an interesting point of discussion amongst the board members. So just trying to anticipate that.
Understood.
Yeah, and we're gonna try to do our best to, for this essential amount that we're talking about in the budget to manage within that. But of course, things come up, right? Things can change. And to answer your point, yeah, we would have to come back to the board. I believe it's a maybe 10 to 15% overage. We would need to come back to the board and ask. So
It's just, I don't want y'all to get jammed either, because like they, you get latent damages. I mean, maybe they went through, I can't recall the details when they, surveyed this, our building site. You just hate for them to get into it and then they find additional latent damages that we just don't know about, in which case it drives up the cost. And then the board gets upset, but you only know what you can know.
that's right.
Right. And I'll tell you this, Wade, if it turns out that we need to do a supplement, then when we get there with the insurance company, I'll know. And then we'll approach it that way.
Okay, fair enough.
Okay.
So I think
That concludes my presentation.
that's the last agenda item, unless I'm missing something, Naj.
So that is everything.
Hunter, any Questions,
I move
comments?
for adjournment.
I'll second that. Well, thank you, everybody.
Thank you so
All
much.
right, guys. Thank you.
Thank you.
Take
Have a
care.
Here,
good day.
y'all.
Bye-bye.